having Patrick with us, a CPA. He's going to share with us about all the various programs on COVID-19. Patrick is with Hutchinson and Bloodgood LLP. He has extensive public and private accounting and leadership experience. He focused on public and their owners' financial, tax, and business needs. Patrick excels explaining complex tax and financial problems and breaking them down into simple and understandable scenarios. And by a couple of the brief chat that I already have with Patrick, Patrick is full of knowledge, very knowledgeable, full of information. So I know we all will enjoy the session tremendously. Patrick.
Well, thank you very, very much, Linda. Thank you everyone for coming in and listening. I'm very fortunate to have this opportunity, and I'd like to thank Jen from our firm who's given me this opportunity. So right now, what we're going to do is talk about COVID-19 loans and benefit programs for your business. Can everyone see my screen, my PowerPoint?
No.
Okay, let's see. There we go. All right, how about right now?
Yeah.
Perfect. So this is the PowerPoint I made. Hopefully it works out for everyone here. And so there's my contact information. And also if you go to our website, you'll see there's a resource center for COVID-19 with questions on information for all the stuff that we're going to be talking about today and the latest news. And there I am. There's a little bit of a blurb about me, about past work I've done, and it'll help put you to sleep later tonight. So topics for tonight's discussion. So there's a lot of stuff that came out. I'm trying to boil it down to items that most people, most of the time, we get questions on. One thing is the EIDL. What is it and can I still apply? The Families First Coronavirus Response Act. So paid sick leave credit, paid family medical leave, paid family leave credit. The Coronavirus Aid, Relief, and Economic Securities Act, also known as the CARES Act. There's a lot in that. Deferral of employer taxes, employee retention credit, net operating loss carryback, and finally, the PPP. I have this, but how do I get forgiven? What are the tax consequences of this loan and forgiveness? What are the changes that just came into law from last week? And a lot has happened with the PPP loan, and we're going to discuss that. So, brief overview, okay? And I'm trying to not get too technical with all these slides that you're going to see here. I'm just trying to keep it so you can see what's going on, see what might help you and how you could use these things. But in the past 4 months, there have been a number of new acts that have been enacted to shore up the economy and taxpayers during the COVID-19 pandemic event. Each act has distinct mechanisms that interact with the taxpayer. The acts passed are named below. Families First Coronavirus Response Act, that was on March 18th, 2020. The CARES Act on March 27th. The Paycheck Protection Program and Healthcare Enhancement Act on April 24th. So the Paycheck Protection Program came about in the CARES Act, but if you may recall, it ran out of money. So they had to allocate more money to it. So that's what the April 24th Act was. And then what just happened a while ago, the Paycheck Protection Program Flexibility Act of 2020. That was on June 4th. Now, before we get to all that, one of the first things that took place for a lot of taxpayers and us as CPAs were getting a lot of questions on was the SBA EIDL loan. The EIDL loan comes directly from the SBA. You log on to, you go to the SBA, you apply over there. There's no cost to apply. There's no obligation to take the loan if it's offered to you. You could get an unsecured amount up to $25,000. If it's above $25,000, max 150, it would have to be secured, but that's not really a problem. Automatically deferred for the first 12 months, but the interest accrues. And you could get an advance, a grant of up to $10,000 or $1,000 per employee. So whether you get the loan or not, if they give you this money up front, you don't have to pay it back. And you can already have an EIDL loan from some other disaster, if you're in Hurricane Harvey or something like that, and they can't be consolidated, but you're still eligible to get this. So how much can I borrow? Up to $150,000. Initially, when this first came out, it was $2 million, but that was depleting funds tremendously. So they recently stopped that and they lowered it to 150. So there are some people who got loans above 150,000, and there's some people who may be in the process of closing a loan that's above 150,000. But if you're to get a new one right now, the max is 150. The interest rates for small businesses, it's 3.75, and the term is 20 to 30 years, generally a 30-year term. So it's great money for a long period of time at a cheap rate. And the eligibility is based on a lot of variety of factors, and we'll get into that a little bit. How can I use the loan funds? So fixed debts, rent, mortgage, things like that. Payroll, but don't use, if you get the EIDL, don't use that money on payroll if you also get a PPP loan. Then you're gonna have a conflict and you can't do that. Accounts payable, some bills that could have been paid had the disaster not occurred. So there's a lot of restrictions where you can't use the money. It's what's called a working capital loan. So you have to use it to help you keep making money. That's really what it's about. And so now let's go to the next slide. SBA disaster recovery loans eligibility, who can apply? That's pretty much everybody. There are a lot of restrictions for affiliation rules and some complicated stuff we don't really need to, we're not going to get into, but here's a list generally of who can apply. But who can't apply? Illegal activity, person with delinquent in child support, and a whole variety of other factors if you're in lobbying or you're in a municipal government. Ineligible uses of loan proceeds. So what you can't use the money for: dividends and bonuses, disbursements to owners unless for performance of services. So paychecks, you could. Repayment of stockholder principal loans. So you can't borrow money just to pay back money that's owed to you from your company. Can't do that. And if you get one of these loans, there's a whole list of items on the loan docs that'll tell you this stuff. Expansion of facilities or acquisition of fixed assets. So that's not working capital. Getting a fixed asset is not a working capital piece here. Repair and replacement of physical damages. Refinancing long-term debt. That's not what it's for. It's to help you keep your business operating. Paying down loans, payment. You can't, this one's interesting. Payment of any part of the direct federal debt except IRS obligations. So you can't use the SBA loan to pay the federal government other stuff except for IRS debt. If you're going to move your business, you can't use the money for that. And there's a whole list of items you can't use the money for. But for property owners, so this is something that is important for property owners. When you apply for this EIDL, you are going to put in lost rents if you have lost rents. Now, most property owners who have commercial property or residential property, but different, a lot of different properties, they have it on their Schedule E rental income. They're in single member LLCs. Now, those are considered disregarded entities for federal purposes. So if you own a property through a single member LLC, then you as the owner is applying for the EIDL. Group all your different properties, gross revenue and lost rents together. Lost rents only count for locations under contract or occupied. So pre-disaster vacancy won't count. Per the SBA, loss of anticipated profits or a drop in sales is not considered substantial economic injury. Loans over $25,000 require collateral. However, if you don't have collateral, you will not be denied. If you have collateral and cannot provide it at the moment, then a pledge that you will provide it when it is available will suffice. SBA will take second or third position on a property. So say if you have to put some collateral to the SBA, they'll say, okay, well, give us collateral, but then you say, well, I can't, I could pledge it to you because I have a loan covenant or there's not enough equity or whatever. Fine, you have to promise it and say, listen, I'll pledge it to you, SBA, when it becomes available. And that's good enough. So I kind of went through that one fast because it's, it's been around, people know about it, and there's a lot to it. And there's a lot to all this stuff, but I don't want to stay on one topic too long. The next one is really the first act that has some tax implications, and people can see some of the benefit. And that's the Family First Coronavirus Response Act. Now, there's a lot to it, but in general, there's the paid sick leave, paid family medical leave, paid family leave, expansion of unemployment benefits, where the federal government gave the extra $600 a week for unemployment benefits. And so this is the only slide we have on this, simply because it can get very detailed very quick. And this is the stuff that you're going to want to talk to your CPA about, but also you want to have some knowledge. And if you own a business and you have a payroll company like ADP or Paychex, those are the folks who need to be helping you with, let me go back to, with the paid sick leave, paid family medical leave. They need to help you on it because it deals a lot with the payroll tax forms that you turn in quarterly. So what the law requires for employers with fewer than 500 employees to provide paid sick leave to employees who are forced to stay home due to quarantining, or to care for a family member, or to care for a child if the school or place of care is closed. And so there was a lot of that going on in April and May and portion of June. And this goes until December 31st, this act. And so don't be surprised if when fall school starts up, employers are going to have to utilize this again. And we'll see what happens in the fall and winter. So the question is, how can I as an employer pay for that? And there's a lot to that one, but briefly, in the case of sick leave paid by the employer receives a refundable credit against its share of OASDI payroll tax equal to 100% of the amount of sick leave wages paid up to 80 hours and a maximum of $5,110 per employee. So it's only on the Social Security tax, and you get a credit for that, but it's a credit based on the wages. So you're not limited to what you pay for Social Security tax. For family leave wages paid by the employer, the limit is up to $200 a day for the employee. And there are various caps and limits depending on the reason of absence. And we'll go over a little bit of that later, but talk to your payroll people, and they're the ones who know this stuff backwards and forwards. This is what they have to do for you. Now here's the big one. Here's the one where a lot of stuff came through, and it's not just the PPP. It has a lot of different things in it, and this is where we'll spend most of our time here, and probably most of the questions will come on this one as well. So the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act, it was a $2.2 trillion act that includes various healthcare provisions and funds, as well as the following that you may have heard of. So the $2.2 trillion wasn't just the items listed here. There was tens of billions of dollars for all sorts of healthcare companies and provisions that went, or I think it was like $300-400 billion that went just to healthcare. Then the rest, most of it went to tax and to loans. So one of it was a $1,200 and $2,400 recovery rebates for taxpayers, plus $500 per child, and limits applied. So that's the stimulus checks that went out to everyone. And depending on what your adjusted gross income was, the amount went down from those amounts that you see there. Modifications to retirement plan distributions, we'll talk a little bit about that. Charitable contribution changes, employee retention credit, payroll tax deferral, net operating loss carryback, expansion of the SBA EIDL, the Economic Injury Disaster Loan Program. So that's how the EIDL was able to get the grant money, the $1,000 per employee grant money. Qualified improvement property depreciation correction. So for all of the business owners out there who have commercial property, commercial businesses, and they did improvements that are 15-year, now they can take a full 100% depreciation on that. And so that's very fortunate for a lot of business owners. And we'll talk a little bit about that as well. And paycheck protection program. So a lot was in the CARES Act. So let's talk about one of them, the employee retention credit. So if you have the PPP loan, you can't do this. But if you don't have the PPP loan, you could do this. And this worked out for some people who are not eligible for PPP loan. And so what the employee retention credit is a refundable payroll tax credit for 50% of the wages paid by employers to employees during this COVID-19 crisis. The credit is available to employers whose, number one, operations were fully or partially suspended due to COVID-19 related shutdown order, or gross receipts declined by more than 50% when compared to the same quarter in the prior year. So it's one or the other. Like, one of these things had to have happened to you. If it happened to you, you could get this credit. The credit is based on qualified wages paid to the employee. So you have to have paid those wages to the employee. And the credit is provided for the first $10,000 of compensation, including health benefits paid to an eligible employee. The credit is provided for wages incurred from March 13th, 2020 through December 31st, 2020. The maximum credit amount is $5,000 per employee. And again, this is something that you're going to run through payroll as far as getting the credit. You're going to report it to the IRS through your payroll reports, your quarterly reports, and that's how you're going to get these funds. And if you really need the funds, there's a form 7200, I believe, that you could fill out, and they'll get you the funds as the term was as quick as possible. I think that they were using, they didn't give a time frame. So it's not a bad deal for some people who were just not eligible for PPP if their entity was not a 501c3, but it's some other nonprofit that's not eligible. And you know, it worked out for some people, and it's still working out. Payroll tax deferral. You know, this is for small employers. It's not too big of a deal, but it's a big of a deal for if you're a large employer or you're any employer and you're short on some cash, and any little bit of cash helps here. So this will help you out. This will help save them, say, 6% on their wages, right? What this is, employers may defer the deposit and payment of the employer's portion of Social Security taxes only. Payment of the portion of self-employment tax corresponding to the employer's share of Social Security tax may also be deferred. So if you're self-employed, you could also do it. It might be more headache than anything, though. The taxes are deferred for 2 years and are due on 12/31/2021 and 12/31/2022, 50% due on each date. And here's something that's kind of important here that was just changed in the law that was passed last week, or was it a week and a half ago. If you have received a PPP loan, you can take advantage of this deferral process. Prior to that, you couldn't. Once your PPP loan is forgiven, you can no longer defer the tax. Any future tax is due as normally scheduled. The deferred balances will be due on the dates previously mentioned. So you can defer the Social Security tax employer portion. You can defer it for all of this year. Then 50% of it is due December 31st, 21, and then the other 50% due December 31st, 22. Now, say if you have a PPP loan and you get it forgiven in October, all the stuff you deferred prior to that is still going to stay deferred and paid at those dates. Any new payroll after that PPP loan forgiveness, any new payroll, you have to remit the taxes like any other payroll. So that's the payroll tax deferral. And here's a sort of a summary I put together that could help business owners and their people who work for them, if they're a controller or CFO or accountant, whoever, sort of navigate a lot of these items here. Now, here's something that is important. The net operating loss carryback. So this was around forever. And then when the Tax Cut and Jobs Act came through 2 years ago, it was taken away. Now, part of the CARES Act, it was brought back. And it's a very powerful tool. Right now, I have a client where in 2018, they had a great year, and it's an S corporation, so the income flows through to the owners. Now, those folks had an IRS balance around $800,000, $900,000 or something like that. And this year in 2019, for 2019 purposes, we anticipate about $1 million loss, and most of it for depreciation. We are going to be able to accelerate a lot of depreciation. They did a lot of leasehold improvements, a lot of property equipment improvements, and we're going to depreciate all of that. We're going to have a huge loss come through on their personal, and we're going to take that back, and we're going to cut their taxes by approximately half. So we're going to take around $400,000 or $500,000 back by using this NOL piece. So let me read this part here. The CARES Act changes the treatment of net operating losses. Now taxpayers can carry net operating losses back 5 years. The 80% taxable income limitation is suspended for the 2018, 19, and 2010 taxable years. I could explain that later, or your CPAs will know what that is. Only federal tax returns, not California. So this is only Fed stuff. This is not dealing with California. There are many factors that need to be considered when claiming an NOL, as well as methods on how to go about it. So there's different ways to do it. You could amend it. There's forms you could fill out, and then you have to do a lot of calculations. So there's different ways to do this. But do I need to amend because of the other tax changes involving depreciation? Possibly. You know, it depends how the assets that are being depreciated are held. Are they on the personal return? Are they on the C Corp? Are they on S Corp? What's the deal? Do I need the cash now for a refund, or should I offset any gain this year or next? And some people actually have income this year that, you know what, or next year, and they don't want to take that NOL back. They'd rather deal with it going forward. So there's things to look at. And also, some people don't want to open what's called open their tax returns. Do I want to open prior tax returns and extend statute limitations? So do you want to invite the IRS to have the opportunity to spend more time to look at your past tax returns? Some people don't want that. Some people say, I don't care. And you know, it's a decision for you to communicate with your CPA about. Retirement plans and accounts. So here's another change that occurred through the CARES Act. The CARES Act suspended the required minimum distribution from traditional IRAs and employer-sponsored plans. Check with your plan. So not all plans allow this, and you'd want to check with your employer or the person who manages your plan, because there has to be some specific language written into it that can be modified. But you want to check with your plan before you say, don't send me the R&D. Waiver on the 10% penalty for early distributions from IRAs, 401k plans, 403 plans, and 457B plans. So that's some people wanted money, they needed money, or some people see opportunity right now and they want to take money out and not take a penalty. So that's an opportunity. But the waiver is based on several allowable criteria, such as the individual, the spouse, or dependent has been diagnosed with COVID-19. You know, it's possible. The individual experienced adverse financial consequences because they were quarantined, furloughed, or laid off, or because their employer reduced their work hours. So there's a lot of reasons here. The individual experienced adverse financial consequences because the individual is unable to work due to lack of childcare. So it's almost free reign to take this piece, but then you might have some tax items here as well. Now here's the one where I spend probably half my time when I'm dealing with clients in regards to all this stuff that's occurred. So the Paycheck Protection Program. So the Paycheck Protection Program, PPP, provides small businesses with funds to pay payroll costs, including benefits and other eligible expenses. Funds can also be used to pay interest on mortgages, rent, and utilities. The entire loan amount can be forgiven, and most likely will be, and I'll explain why. The loan amount can be up to $10 million. Available through June 30th. I know people who are applying for it right now. I know people who got it last week. So not everyone got it in April. There's people doing it right now. And for them and their business needs, it suits them because they just started opening up and they just started having employees come in, and it's the perfect time for them. As of June 12th, there was still approximately $129 billion in funds left. So I would imagine it's less now, of course, maybe 100 billion, who knows. Loan amount is based on 2.5 times the applicant's 2019 average monthly payroll cost. If you're a Schedule C, if you're self-employed, it's actually based on 2.5 months of your net income. But for corporations and S corps, all those things, it's 2.5 times the monthly payroll cost. So who can apply and how? So unlike the EIDL, where you go directly to the SBA, you have to go directly to a bank for this. So you must be a small business, fewer than 500 employees, eligible nonprofits, veterans organizations, tribal businesses, sole proprietorships, self-employed, independent contractors. An application for the PPP is through a bank, not directly with the SBA. And some banks are not doing it. Some have decided not to do it at all. Some were doing it and doing a lot, but they have stopped for various reasons. But there's still a lot of banks that are still doing it right now. And I would say go for it if you need it. And we'll talk a little bit more about that. So who's ineligible? It's very similar to the EIDL about who's ineligible. Here's a list here. If you're engaged in illegal activity, and here in California, if you're in the marijuana business for the feds, that's illegal activity. Your household employer. So you have someone at your house caretaking for you. You're not eligible for this. And some other items here: suspended or disbarred, currently delinquent or defaulted, and guaranteed. So you borrowed from the SBA before and you're delinquent, well, you can't do this one. So what's included? And this is, initially this was kind of like, well, okay, what's included, what's not included? This one we know about now. So salaries, wages, commissions, tips, and it's capped at $100,000 per employee. Employee benefits, including costs for vacation, parental, family medical leave, or sick leave count, state and local taxes assessed on compensation. So federal taxes that are imposed after the gross payroll don't count, but state taxes do. For sole proprietors, wages, commissions, income of net earnings from self-employment capped at $100,000. Seasonal businesses, some people have seasonal businesses, and there's a whole different function for them when it comes to the amount you could borrow and be forgiven. But it's the changes that have just recently taken place, it doesn't really matter anymore. New businesses, average monthly payroll costs from January 1st to February 29th. So say if you just started your business and in this year, and then this COVID happened, and you have some information, and you could use some of that information to help you get a PPP loan. Permitted use of funds. And so this is probably really the most important part, because It's been relatively easy for people to get PPP loans. The harder part is for people to understand what they could spend it on. And then after that, how do they get it forgiven? So the borrower has 24 weeks from the funding date. So it's not from the loan date, it's from when you fund it, when you got the money, to use the loan amounts for eligible costs. Now, originally it was 8 weeks, but it just got extended to 24. And that's just a huge relief for a lot of people. Um, the eligible costs are payroll costs, rent under lease obligations, utilities, and what's interesting here, interest on mortgage obligations and interest on any other debt obligations that were incurred before. So you could use the funds on interest obligations and debt obligations that were incurred before February 15th. We still are trying to clarify if we could get that portion forgiven. So we know if you had mortgage interest, you could get that forgiven. But would interest on a vehicle loan count? And we honestly don't know right now. And for forgiveness, we'll talk a little bit more about that soon. The borrower must use 60% of the funds on payroll costs during the initial 24-week period. The other 40% must be used on other eligible costs. Before it was different. Before it was 75% and 25%. Now it got changed to 60-40, which is much, much better and much easier for people. And with 24 weeks, 60% on payroll costs as a minimum, it's great opportunity. The SBA still needs to provide guidance on debt forgiveness requirements and process. They've done a lot, and it happened this morning. So this morning they came out with some more stuff. Every few days, and sometimes every week, they give us new information. They change old things. So these past few months here have been a lot of change regarding not just all the other stuff we talked about, but just on this PPP loan. And it's a huge, huge thing. It went from having no tax consequences to having tax consequences. And we'll talk a little bit about that as well. Loan underwriting. And this is all done by the banks. And all banks have their own forms and definitions of payroll costs and needed documentation. Now that's really coalesced for the past few weeks, where things are a lot more similar at different banks, but they still have their different quirks about what they want and how they want it. Banks do not need to get permission from the SBA to process or fund specific loans. They tell the SBA, hey, we approve this loan, here it is, here's their number, give us funds for this. Okay, bank, here's your money, go ahead. Banks will verify if the business was in operation on February 15th, 2020, that the business had employees, the average monthly payroll cost calculation, and other supporting information. And so it's actually fairly systematic, fairly smooth now on getting these loans. It's the forgiveness that people are really asking about. And other items, collateral required, no. Personal guarantee, no. SBA fees, no. Agent fees, no. If you did use an agent, people are trying to get money from the banks for their agent fees, but there's a lot of pushback, and that's a whole different thing. You can probably go to Google News and find out about. Now, loan forgiveness. So let's talk about how it works, kind of. If you go with the 8-week or the 24-week period, and I would recommend you go to 24-week period, you submit a written request to the lender. And the request should include documents verifying full-time equivalent employees, employee pay rates, payments on eligible mortgage interest. Again, we don't know about interest on other items. What the SBA says is for forgiveness, what's eligible, mortgage interest on real or personal property. And I know what interest on personal property is, but I don't know what mortgage interest on personal property is. Mortgage interest on real property, which is a building, makes sense. So they have to clean up some of that verbiage. Payments on leases, payments on utilities. Lender has 60 days to reply. So they may not give you a reply right away. They have 60 days to do this thing. I think it's on their benefit to do it quick because they don't want loans on their books. that are going to be forgiven. So they'd rather do it quick, but they have time to give you this forgiveness. They don't have to do it within a week or two. So you'll use 75 or 60% of the funds of the payroll costs during the initial 8 or 24-week periods, respectively. The other 25 or 40% must be used on the other eligible costs in the same period. So when most everyone who got a PPP loan initially, it was an 8-week period. You have to use 75% on payroll costs and 25% on other eligible, or you could do all 100% on payroll, but the minimum was 75% on payroll. Now it changed. They said, you know what, we're going to make it easier. People have been closed down for a long time. They can't spend all the money. We're going to say, you know what, 60% on the payroll cost, 40% on other things, but at least 60 on the payroll. If you don't hit 60, we'll do a pro rata share on the rest. But also you get 24 weeks to do it. And that's fantastic. If you get 24 weeks to spend this money, it's sort of hard pressed where you won't be able to spend it all. It's the loan is based on 2.5 months of the net income, but they're giving you 24 weeks to spend it. So they're giving you 5-6 months to spend the money. So it's kind of hard to say that you're not going to have enough time to spend that money. And if you spend that money on all eligible items, it's going to be forgiven. Now, the way the CARES Act was written, it was written that this cancellation of this debt, this income, is not going to be taxable to you. And so that's fantastic. It's not going to be taxable to you. And what the IRS did correctly is they said, well, that's fine. We're not going to have you pay income tax on that. It's not going to be income to you. However, we're not going to let you take the deductions for the expenses you paid. So in a sense, you're still going to have to pay tax on it. There's some senators out there, and there's a bill right now in the Finance Committee to bring it back where it's not going to be taxable. So say if you got a $100,000 PPP loan and you're at a 30% tax bracket, it's a flow-through entity. Instead of paying 30 grand in tax, you would pay 0 tax on that 100 grand. But we don't know if that's going to apply. Currently, you're going to pay tax on the amount that's forgiven because you're not going to be able to get those items you spent the money on as deductions. Now, if you already have a loss for the year, then in a sense, there's no tax. You're going to have less of a net operating loss. But if you did have a profit, that profit is going to include the deductions you can't take. There's also safe harbor from reductions in loan forgiveness based on reductions in full-time employees for borrowers that are unable to return to the same level of business activity as it was on before February 15, 2020. And again, this stuff can get even more complicated. But in general, what they're saying here now, there's this thing called FTE, full-time employee equivalents, that you had to meet pre-pandemic and post-pandemic or during PPP cover period time. They extended it to December 31st, which is great. So you would have to hit your February 15th employee level. And if on December 31st, you hit that level, fantastic. You're gonna not be reduced on your loan forgiveness by your full-time equivalent employee. But also, if you're not able to do it for a variety of reasons, there's a safe harbor now, you still won't get hit. And this is something that the banks will explain to you a little bit more as time progresses and the forgiveness documentation from your bank comes through. Your CPAs are also, everyone's catching up on this stuff. This stuff just came out today and also last week. There was a lot of new information out there, but I think it's going to be very difficult for people who got this money to actually end up with a loan, unless they're in the type of business where they make concerts. Well, people in the concert business, I don't know how those people are gonna, if they got a loan, how they're gonna spend all that money we'll see. So there's various companies out there that might have gotten PPP loans, and it won't all be forgiven. But I think for the vast majority of people who receive the PPP loan, they can get it forgiven. Let's see. And so now let's talk about what just happened late last night. It has today's date, but we got this last night around 11 o'clock or so. And I'll read this and then I'll explain to you what they're saying here. So this is exactly from the interim rule that came out late last night. Payroll costs, including salary, wages, and tips up to $100,000 of annualized pay per employee for 24 weeks, a maximum of $46,154 per individual, or for 8 weeks, a maximum of $15,385 per individual, as well as covered benefits for employees, but not owners, including healthcare expenses, retirement contributions, and state taxes imposed on employee payroll paid by the employer, such as unemployment insurance premiums. So, say, okay, what's that telling me? So, the cool thing about this is before you had 8 weeks, you got this loan, okay? Say you got this loan and it was for $200,000, whatever. And you had 8 weeks to spend it. The maximum per employee that you can get used as forgiveness was $15,385. Now, that increased to $46,154. And it's paid over 24 weeks. So that's why I'm saying it's going to be really difficult for people to not get it all forgiven if they have employees and they're paying them from this. I don't think you're going to have an issue with a 60% cap. And I think that, hopefully your businesses are doing well, that you'll be able to utilize this. And then I'm going to show you one more pertinent update that came out late last night and this morning. So I'll tell you what this is saying, and then I'll also tell you what this is not saying. Owner compensation replacement calculated based on 2019 net profit as described in paragraph 1B above, and I can send you the PDF that this is from if you ever want, with forgiveness of such amounts limited to 8 weeks worth, 8 divided by 52 of 2019 net profit up to $15,385 for an 8-week covered period or 2.5 months worth, 2.5 divided by 12 of 2019 net profit up to $20,833 for a 24-week covered period, but excluding any qualified sick leave equivalent amount for which a credit is claimed under Section 7002 of the Families First Coronavirus Response Act, or qualified family leave equivalent amount for such credit is claimed under Section 7002. So what that is dealing with, it's dealing with people who are on Schedule C or partners in a law firm or accounting firm, something like that, where they're considered self-employed people. Now, prior to that, if people who are, say, Schedule C and they got a loan, now, let's say if a person's a Schedule C person, they're independent contractor, they have their own business, and they have a net profit of $100,000. The loan amount that they would have received is around owners when it comes to retirement benefits and things like that, and what you can use as an eligible cost. And there's a lot to it, but everyone's here to help. And let's see, last one here, loan terms. They changed it. So it's a 5-year repayment term if a loan is made on or after June 5th, or if approved for extension by the lender. If not, the loan is due 2 years after funding date. So if you got a loan before June 5th, we're gonna make it a 5-year loan.